Hi, everyone. Welcome to our vlog. We are going to talk about how an S corporation can save you money.
If you like this vlog, please like and subscribe to our YouTube channel where we provide a lot of content to business owners. So, S Corps.
Yeah.
How do S Corps save us money?
Yeah. So I guess first question, what is an S corporation?
Right. You want to answer
that? Yeah. So an S corporation is an entity, it could be an LLC or an actual corporation that files an election with the IRS to be taxed as an S corporation. Now, I'm not going to go into all the requirements to what all the different requirements to be an S corporation. But once you're an S corporation, you file that election, and you are treated as an S corporation for federal tax purposes. And a lot of states automatically treat you as an S corporation as well. But you may need to check the particular state that you're operating in or states to make sure you don't need an election with that state as well.
Absolutely. And so an S Corp can be a single owner. It does not need to have multiple owners. And so what we see, sometimes people will create maybe an LLC that then decides that they want to make this S Corp election on their own. And they're the only people working in the business and the only owners of the business. So that is an option for some people to use and help maybe save some tax monies. And we're going to talk a little bit how an S Corp is taxed to help you kind of understand the basics of what makes it such a appealable entity structure.
Right. If you're an LLC that elects to be an S corporation, that's just for tax purposes. You don't lose the legal identity of the LLC as an LLC. It retains that legal structure.
Right. Now, if you were a sole proprietor that was not an LLC and wanted to become an S Corp, then you would have to create a legal structure in order to do that. You cannot go right from a sole proprietor to an S corporation without creating a new entity. Okay. So an S Corp is what you'll hear in the world of accounting and tax as called as a pass-through entity. And basically what that means is that the activity of the company is reported to the IRS, but is then not subject to tax. And that activity, the net activity, is passed through on a form to the individual, and the individual pays the tax at the individual level.
Right. The S Corp has a separate filing requirement, but is, as Michelle says, not taxed itself. The activity all passes out, and you report that on your personal income tax return.
Right. So as an owner operator of an S corporation, owners have multiple hats that they need to wear. The first hat is obviously the owner hat, right? They own the business and they operate the business. The second hat is an employee hat, and they're doing some sort of role within the company that would require some sort of pay as an employee for that company. It's very important to understand, we're not going to get into it too much right here, but it is very important to understand that you have these two roles, and it is necessary to run payroll or pay yourself as a owner operator, an employee of the company.
Yeah, anytime you're performing services as an owner of an S corporation, you have to take a what's called a reasonable salary. And reasonable is a very open-ended
maybe we'll do a blog on that going forward.
But that's the IRS requirement. So you have to have a reasonable salary for what you do in the business.
Mm-hmm.
So that is all reported on the W-2 as if you worked for some other company as a non-owner. So you have that W-2 that is reported on your personal tax return.
Right.
So that's one aspect of the income.
So you get treated as an employee in that sense, and that is a deduction for the company.
Right.
Then the company has the remaining net income, hopefully it's net income,
right,
at the end of the year that would be subject to taxes. So that's the owner investor hat that we were talking about, right? So we talked about the employee hat. Now we're talking about the owner investor hat. And that net income is subject to taxes as well.
Right.
So not just the W-2, but the net income of the business is subject to taxes.
Yeah.
So let's talk about how the S Corp ownership net income is taxed as opposed to, let's just disregard the W-2 right now. Let's just talk about how is that K-1 net income pass-through activity subject to taxes.
Yeah, so this is where potentially there could be tax savings for you and why we're creating this blog, right? The a regular pass-through entity as a partnership or if you're a sole proprietor, the entire net income that is allocated to you, especially in a partnership with multiple owners, is subject to self-employment taxes in a operating company. So that income, that self-employment tax is the FICA and Medicare tax that you would pay as an employee and as an employer. So it's both sides of the equation. As being self-employed, you wear both hats. You have to pay as the employer and the employee. So you have both of those pieces. That in an S corporation, the net income that is passed through you in the K-1 is not subject to self-employment tax.
Correct.
Only subject to regular income tax purposes. So where the savings is that you have net income that's not subject to self-employment taxes as an S corp, but if you're a sole proprietor or partnership, you would.
You would.
So that's a pretty significant savings.
Right. And that's why the reasonable salary component of all this is so important. Running a reasonable salary in the eyes of the IRS helps kind of solidify the fact that, you have a piece that is the work that you're doing within the company that you're getting paid for, and then you have a piece that's considered the investment or the return on your investment. And so that is why that net income is not subject to self-employment taxes. It's a return of your investment and can help save you tax money.
Right, exactly. And that return on investment, that net profit, when you take that out of the company, you've already paid regular income taxes on that, so you could take that out,
without paying again.
Without paying again, you're not double taxed on that, which is, that's something that's kind of, there's not a lot of owners understand that.
Yeah, there's some confusion around that for sure. So we talked today about what an S Corp was so that people could understand a little bit about what it actually is. And then we talked about having two roles within the company as an owner, the operating, running the business, having a role within the business, and then the investor role. And then how is that net income from that S Corp passed through to you and subject to tax? So if you like our blog today, please like and subscribe to our YouTube channel. We also have a masterclass that's starting up, and it's moderncpaonline.com/masterclass if you'd like to check that out. Thanks so much for your time today, guys. Take care.
Thank you.